Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two companies that are poised to beat their next earnings report based on some promising website traffic figures. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we are utilizing TipRanks' new powerful research tool that lets us take a look at estimated traffic data for publicly traded companies' websites. This lets us see what direction their traffic has been trending in and gives us that insight before the companies release that data during their earnings report. This can be some really valuable insight. So both these companies have earnings reports coming up in the next couple of weeks and website traffic that is trending in the right direction. Before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's jump right into these two companies. The first stock that we're looking at is fairly new to the public market. It is a company called RSKD. It trades under the ticker RSKD, currently priced at $18.58 per share. RSKD has been in business since 2012, but just went public this past summer near the end of July, when they put over 17 million shares on the market at $21 per share. RSKD is a software-as-a-service company in the online risk mitigation and fraud prevention niche. Its platform leans on artificial intelligence to verify online transactions. It automates the approval or denial process with accuracy of 99.8%. RSKD captures hundreds of data points per transaction, then correlates them with past transactions to quantify risks. Accurate fraud prevention lets RSKD's merchant customers drive higher sales with lower losses. And RSKD actually assumes liability for all fraudulent transactions while guaranteeing minimum approval rates. And the results speak for themselves. The 10 largest merchants on their platform have seen an 8% uptick in revenue and a 39% decline in fraud-related expenses. But those figures are as high as 20% and 60% respectively for some. Their company is trusted by some big names, including Wish, Acer, Aldo, and Prada. Taking a look at website traffic data for RSKD, on the chart, we can obviously see a huge increase here in website traffic for the unreported period. Hovering over it, we can see quarter-over-quarter growth of 296%. If we switch down here and add in year-over-year traffic, we can see an increase of 73%. RSKD shared their first quarterly earnings report as a publicly traded company in September. They saw revenue of $55.7 million, which was up 47% year-over-year, and gross profits at $33.3 million, up 65% year-over-year. And their next earnings report will be coming up soon on November 16th. One analyst weighing in on the stock is five-star analyst Brent Bracelin from Piper Sandler. He says robust e-commerce secular tailwinds coupled with card-not-present rules and regulations has significantly increased the burden of fraud risk on merchants. This perfect storm has helped RSKD quickly scale into a $200 million plus revenue run rate model in just 9 years. This new machine learning specialist helps tame e-commerce risk with chargeback guarantees for large enterprise merchants. Brent is one of 7 analysts that currently have a rating on the RSKD stock, and it does come in as a strong buy based on 6 buy ratings and 1 hold. Their average price target comes in at $32.83. That would be an upside potential of 75%. And we have a fairly close range of price targets, with many coming in between the $32 to $35 mark. On the low end, we have a $29 price target, which would still be an upside of 55%. All of those price targets were assigned 2 months ago following their first quarterly earnings report. So it'll be interesting to see how this next earnings report comes in and how analysts react. All right, now the second company we're taking a look at today is DraftKings. Their stock trades under the ticker DKNG, currently priced at $47.53 per share. DraftKings is a leader in online sports betting and fantasy sports leagues. They have their sportsbook, which offers safe and secure online sports betting, their daily fantasy sports, which is an industry leader, and their online casino, which has over 300 games. Over the last few months, DraftKings has also made big moves into the NFT sector, as they've launched the DraftKings Marketplace, where you can snag NFTs of the biggest icons in sports. Back in July, they announced a partnership with Autograph, an NFT platform for the most iconic brands and names in the sport. Some of the athletes that Autograph already partners with includes Tom Brady, Tiger Woods, Derek Jeter, Wayne Gretzky, Simone Biles, and many more. It was also announced this month that Polygon would be in a blockchain collaboration with the DraftKings marketplace. This deal provides DraftKings marketplace with a scalable, eco-friendly blockchain solution that enables added throughput and expanded capabilities. DraftKings now has the option to potentially contribute to Polygon's governance and help secure the network as a validator node with its own stake pool. And also over the summer, they made a big acquisition with Golden Nugget. This merger brings them a new iGaming brand, live dealer capabilities, and a whole suite of additional benefits. Now let's take a look and see what website traffic looks like. Looking at the chart, we can definitely see an increase in traffic during the unreported period. Quarter-over-quarter growth is up about 29%. Taking a look at year-over-year traffic, we're also up about 29%. We can also see how the stock price is correlated with this traffic. Moving down below, we can see month-over-month growth of 57% and year-to-date growth at over 83%. DraftKings shared their most recent quarterly earnings report in August. They saw $298 million of revenue in their second quarter, driven by strong engagement across their core product offerings. This was a 297% year-over-year pro forma revenue growth. Their next quarterly earnings report is coming up on November 5th. Weighing in on the stock is analyst Daniel Pulitzer from Wells Fargo. He says that our favorable view of DraftKings reflects its position as a leading platform in iGaming, which we view as the most attractive growth vertical in gaming, potential upside to its current 17% iGaming shares as the company integrates Golden Nugget, fine-tunes its product, and targets casino-first customers, systematic buildup of a highly differentiated, full-scale sports betting and media offering, and strong cross-selling capabilities. The DraftKings stock currently has 18 analyst ratings, and it does come in as a moderate buy based on 12 buy ratings, 5 holds, and 1 sell. The average price target comes in at $69.47. This would be an upside potential of 46%. On the low end, we do have our sell rating with a downside of 13%, but on the high end, we do have some price targets up above $100, which would be growth potential of 121%. The most recent rating came in just yesterday with an upside of 60%. So there we have two companies, both with earnings reports coming up in the next couple of weeks, some pretty bullish price targets from analysts, and if our estimated website traffic shows anything, we should be expecting some positive results from those earnings. Now you guys know I always love hearing from you, so make sure to let me know your thoughts on these two stocks in the comments down below. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Also, please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.